So it is time to prepare to trade the best setups at the best prices. I'm going to be giving you an in-depth price action analysis that is going to help you finish this week very, very strong within the green. YouTube decided to issue my channel a strike, and I was not able to post here for over a week. With that being said, let's get straight into the analysis. So in terms of the SPY, this is what I want you to be aware of heading into Friday. We are currently setting up for an opportunity to be buying the dip as the market is currently gapping down. As you can see, we closed at 597.44. Right now we are trading at 593.70. Based off of what I'm seeing, mainly on the 10-day, 30-minute chart pattern, what's going to happen is the SPY is going to try to explode back up to fill this gap that's waiting to fill above at 597.44, which would be one of the best levels to use the breakdown and retest strategy in the gap close reversal trading strategy to be buying put options on. Now, in terms of capturing this falling knife and looking for the dip buying opportunity, this would be the strategies in play. So we have a break and retest level, and we also have key extended hour support that has not been tested during the normal trading hours. Once this break and retest level and key extended hour support is tested during the normal trading session, the SPY is going to try to bounce first and start to have a micro reversal to start to fill the gap that is waiting to fill above. With that being said, the break and retest level is sitting right here towards this 592.50 to 593 zone. That's going to be the key level of interest to be watching. And then in terms of this key support, it's going to be towards 591.80 to 592.50 overall zone. Those are going to be the zones to be buying call options using the break and retest strategy, using the key extended hour support levels that have not been tested during normal trading hours, likely going to bounce first during normal trading hours. And then also playing for the reversal for the gap that's waiting to fill above. Keep in mind, this analysis that I'm mentioning could end up playing out during the pre-market trading session. For those of you who trade futures during extended hours trading session, you can take advantage of that by using a prop firm. You can also, use real money, right? Whatever you prefer to do, right? But you can use this analysis to your advantage, whether that's, futures, whether that's trading options during normal trading hours. But keep that in mind because, sometimes a lot of the analysis plays out sometimes during the pre-market. So with that being said, those are the main plays. Those are the two main plays. That's where I'm interested in going long. That's where I'm interested in going short. Going long towards this buy zone of support in this break and retest zone right here, and then looking to go short towards 597.40. So calls right around here, and then puts right around here, right? Now, let's zoom out of the chart just a little bit here just to get more levels heading into Friday. So in terms of more levels, if we were to go below that, the next zone to be buying call options would be this 591 to 590 to 589.50. That'd be the next zone for overall calls. I mean, based off of everything that I'm seeing, that would be the main overall zones to really be focusing on heading into tomorrow. It's likely going to try to bottom towards this zone. But like I said, if we're going lower during the normal trading session, if we're already cracking through those levels, right? What I would say is really focus on buying the dip early. Focus on buying the dip early. The first zone is going to be that, that 593 to 592 overall zone. Next zone, if you if you look right here, next zone is going to be towards that 590 zone, right around that 591 to 590 break and retest, key extended hour supports not been tested. Next zone below that is going to be this 587 to 585, right? So those are your best zones. And then in terms of next week, we'll be looking at 584 if SPY drops that low for key dip buy, and then a gap close reversal play at 580 to 579 mid, right? If it were to go that low. But based off of what I'm seeing here, is looking something like this. These are the most likely outcomes. SPY has this move up, SPY has this move up, comes back down, gaps down during extended hours, starts to bottom out towards extended hours, and then it starts to spike back up, and then it starts to reverse towards a breakdown retest level, gap close reversal level. The reversal zone could be right around here at 596 to 597.50. That's where the SPY can potentially drop and start to crash towards that overall zone, right? And then again, so it could be something like this where, we had this move up, we drop during extended hours, gap down, we drop during extended hours, gap down, then we push back up towards the gap fill, right? But in terms of what it actually looks like, it looks more like this. This is what it looks more like. We had this move up, right? And then we had this move up. So compared to this left-hand side right here to this, move up, the way it moves up, very similar. The way it comes down, very similar. The way it comes down, very similar. Starts to downtrend during extended hours, and then towards that market open, the strong push. So one of the best plays could be a dip buying opportunity at the market open to play for this zone. This would be the profit target zone. If we were hanging around that 591 area, think about it like this. There's going to be a magnet right around here at 595.50 to 597 mid. There's going to be a magnet in between a zone. That's going to be the zone where the SPY is going to want to try to, go back to, right? So buy the dips at the lower levels. And when it hits that magnet zone, it's going to try to reverse. It's going to try to drop back down. So look for puts. So that's the game plan. So key time to buy calls, especially if we're on that downtrend, key time is going to be the morning. Look to buy early, towards 9:30 a.m., towards 10 a.m., and wait for the reversal on puts, right? So this is what you're going to do. Use the 30-minute chart, use bullish 30-minute candlestick confirmations, go back throughout the past 10 days, study every single time how SPY was dropping, Study what the SPY was doing when it bottomed, when it was no longer a falling knife. What did it look like? What did the 30-minute candles look like? Green, red, green bullish pins, right? Breakouts and retest, right? So just look at the 10-day, 30-minute chart as a mirror, reflect it back to you, right? And look at the patterns, look at the history. Study the past 10 days, 30-minute charts. Every single time the SPY had a nice little dip, how did it look when it started to reverse? How did it look when it started to bottom, right? That's how you catch the falling knife at one of the levels and use the key time towards market open. And also use the break and retest level. When you're seeing that, wow, this is a confirmation of reversal, you can try to buy into the falling knife, and you can also wait for break and retest. So right here, green, red, green. This is bullish. This is all bullish 30-minute candlestick confirmations. Lots of consolidation for hours. It's going to try to spike. It can't just keep falling if it's sitting here for fucking hours at key support, right, towards one of our levels, right? So once you notice it starts to break out, this right here is resistance, starts to break above, green, red, green, higher support, break, retest, right? The lows of these candles at a retest, this previous resistance, buy the call options, right? So that's the game plan for calls. You could try to catch the falling knife. You could look for signs of trend reversal and get in on that at lower levels. And you can also use the break and retest level. Once it's already more confirmed and already beginning to reverse, look for breakouts on a 30-minute chart, wait for it to drop back down, at or towards that previous resistance, wait for the bullish 30-minute candlestick confirmations, trend reversal, use the break and retest, right? 2 strategies in play heading into tomorrow, and then the main play for puts would be the magnet zone I gave you, right? So just to give you the quick price ladder and understand in terms of this price ladder, use the information that I gave you to your advantage along with the key confirmation and times. But just understand if one of the levels reacts bullish, it drops to the next level. If one of the levels reacts bearish, if one of the levels reacts bullish, it goes up to next level. If one of the levels reacts bearish, then it drops to the next level, right? So, in terms of the overall ladder, 585, 590 to 591, 592 to 593, right? Focus on that higher zone, that 592, 593. And then if we go below that lower zone, right, in the key time towards market open. And then magnet zone, where it's going to try to go back to 595.50 to 597.50. Without a doubt, the SPY should fucking go back to that zone. And that's key reversal zone for overall puts, right? And then if there was a break of trend, if SPY breaks above 597, retest, forms higher support, then it's going to be on track to push to 599 to 601 range. And if it goes above that, then it's on track to push to this right here, 602.69. So in terms of puts, the put zone is 595 mid to 597.50, 597 being the best overall range for breakdown, retest, gap, close, reversal. If SPY breaks above 597, retest, reacts to support, don't buy puts until this next gap fills. There's 2 gaps to fill. It's likely going to start to reverse and drop first once it hits this 597 one. But, in terms of this situation, understand there's two gaps. Based off of what I'm seeing, most likely outcome is we drop first at that 597.46, right? But if we break out, react to support, SPY's going to start to flip bullish, and there's going to be a break of trend. And we're going to start to fill the gap that's waiting to fill above at 602 mid, which is the next best level for puts, 602 mid. You see how it filled this gap? First red bearish 30-minute candles confirmation, starts reverse. Look for similar confirmations towards this gap and this gap, likely to drop first at this one. Once we hit this one, another key level of interest for puts, right? Just to understand, if we break above 597.50 and react to support, there's a break of trend. It starts to go up to fill the next gap. That's the next best level for puts. But if it breaks out a little bit, drops back down, and turns it back into resistance, then you could try to puts again in that situation, or just hold the previous puts before that, right? So just understand in terms of break of trend with most likely outcome, there's a break of trend. If we go above 598, drop back down, react to support, SPY starts to fill this gap, waiting to fill above, next best level for puts. If it comes back down, reacts bearish, you can still do the puts, right? And in terms of another break of trend, if we're going below like this, I would say, let me zoom back out towards extended hours. I'm going to explain to you now the break of trend from the downside point of view. If we're going below like this, I would say like, it really depends, but it really depends on the market open. But if we're going below like 589, that's a massive shift. And the next level for calls would be 585 to 587. Overall, though, we're considered bullish, and in terms of a key time, it's that market open. So use this game plan, use the most likely outcomes to your advantage, use the 30-minute candlestick confirmations, and that is going to be the overall game plan on the SPY. Now, we are heading into Friday, and you guys are well aware in terms of zero-date options. We mainly trade SPY and SPX. SPY during basically all hours, and then power hour 3:30 to 4 p.m. we shift our focus to SPX when it becomes cheaper and low risk, bigger gains than SPY, right? And in terms of Fridays, we trade stocks because a lot of the stocks that we're going to be trading on Fridays are going to have zero date options. SPY has zero dates every single day, SPX has zero dates every single day, stocks do not. For many stocks it's Friday. So in terms of a couple stocks on my radar, highly requested inside of Team Roar was Tesla. Tesla was one of the situations, and basically what I'm seeing on Tesla is similar to SPY. Look to buy the fucking dip. If we're dipping, look to get in on a dip. Basically, in terms of like how we're looking, look for a drop and look to get in on a break and retest. So in terms of key support levels, this is a key level right here, a break and retest. This 311 to 313, that's the lower zone. And the higher zone, this is the more likely zone to hit. This like 318, 316, 319, right around this overall zone. Look for bullish 30-minute candlestick confirmations. Very similar to something like this. Have this move up, drops, loses gains, bottoms. I'm telling you, for those of you interested in Tesla, once it does drop back down to this fucking 308 to 310, 311, that's going to be a strong buy zone, especially this like 310 to 308 zone. That could be next week. But another key zone to watch heading into tomorrow is this 318. Those are the overall levels to keep an eye on, right? Is going to try to drop first, and then it's going to try to have a bullish recovery. So in terms of another stock that is on my radar heading into tomorrow, Uber. So Uber is picking up a lot of volatility. Uber had a massive move, from 86.50 to 82.50. I mean, that's a big move for Uber. So basically, look for fucking dip buying opportunities. Look for an oversold dip buying opportunity, something like this. We had the massive move to the downside. We just had this part. Look for a dip buying opportunity. Look for some sort of double bottom. Look for green, red, green. Look for double bottom. If Uber has a nice spike, wait for it to drop back down towards that spike. Look to buy the fucking dip, man. I'm telling you, keep your eyes on Uber. In terms of this play, I'm going to be watching this for like a dead cat bounce. That's what I'm looking for. I'm looking for Uber to just be sitting, just be dead, or I'm looking for a nice spike and then it drops back down to retest that previous support. And then I'm looking to get in on Uber calls heading into tomorrow. That's going to be a nice play, man. I'm telling you, it's got the volatility. Could be a nice dip buying opportunity. In terms of levels, you got to understand that we're not just using levels, we're using strategies and the information that I'm providing to you. But in terms of some levels to watch for, keep an eye on 81.52. If we go further out, below that, keep your eye on, let's see, below 81.52. Let's see. 80.50. 80.50 is next level. So In terms of the final stock that I'm going to be keeping an eye on, and there's plenty more. This is all I'm going to be covering within the video. Just know we're going to be looking to trade stocks tomorrow as well. Amazon is setting up for an interesting watch here heading into tomorrow. Kind of similar to SPY in a sense. Just something I'm going to be keeping an eye on because Amazon is having that big candle here on the daily chart. It's picking up on volatility. A big move is expected to come. Friday's going to be fucking amazing, man. Everybody's going to be fucking fired up for Friday with the market being closed on Thursday. So, and then we have the weekend ahead. The whole fucking world is going to be fucking trading tomorrow. So 211 and 208. Keep your eyes on those overall buy zones, especially that 208. We got a gap close reversal on Amazon here at 208. So use the bullish 30-minute candle confirmations. Now, with that being said, for those of you who are interested in joining Team Roar, you gain access to our real-time zero-date options trading alert system where you can trade options alongside with us. It's the first thing down below. Within the description, we buy cheap, low-risk, zero-date options, very far out of the money zero-date options. We have the highest win rate within the game. And you're going to see this is a real-time zero-date options trading alert system. This is not just buy and sell trading alerts. So just to give you some background in terms of the system that we have, it's designed for far out of the money zero-date options, very, very cheap, very, very low risk. And, we're taking very low risk trades. The average contract buy is 50 cents a contract, multiplied by $150 a contract. You can get started with one contract. Every contract that we buy, you can potentially make back the cost of the monthly subscription. On our best trades, you can make back 10 times to 20 times the cost of the contract, $500 to $1,000 plus a contract on our best trades. Every single week, we have one trade that goes up 1,000%. If you make a 1,000% return on a trade, you can literally have 9 100% consecutive losses in a row, one 100% loss each day for the next 9 days, and still be profitable with one green day, 1,000% win, and 9 red days, each 100% losses in a row. So it's the strongest foundation in trading to be successful with a low win rate. And part of that is because the percentage gains are the biggest within the market and they're the cheapest, lowest risk contracts, right? And in terms of some background to the system, we don't use stop losses. Inside of Team Roar, we do not use stop losses. So we do not use stop losses. We put in our max risk per trade, our R multiple, as our position size, as our entire position size. So meaning the number of contracts that we buy, that's our max risk per trade. If it expires and worthless goes to 0, then the most we lose is our max risk per trade, right? So our position size is our entire risk in a sense. And you can make unlimited profit potential. You can make unlimited fucking wins. As you can see this trade right here, 602 SPY calls, 44 cents. Quickly sold it for 112 cents. That's over 100% profit return. Got in here, added here, sold here, right? So with that being said, we also add to winners. By adding to the winners, it increases the gains. So if you add to your winners, you double to triple your gains. And we quickly add to winners and set a profit stop to ensure that we don't go green to red. So we rarely add to losses. What we do is when we're up a little bit, we tend to be up a lot. So we quickly add to the win when we're up like 5-10% very, very quickly. And then we set a profit stop to ensure that we don't go green to red while we're increasing our position size, It protects that new average cost by setting the profit stop. It's possible to go green to red, right? And then from there, we move the profit stop up higher to ensure that, if the market has a big move against our trade, we don't get back all the gains. We don't get back all the gains if the market has a big move against our trade. And, with that being said, it protects us because we get profit stopped out where we set our profit stop to, right? Same way traders get stopped out where they set their stop loss, except they're losing money, but with profit stops, you're making money and you're not going green to red, right? And you're going to see 7 out of 10 of our trades, the ones that are dead plays, a dead play is a trade that drops like 50%, it comes back to life. 7 out of 10 times, the trade comes back to life. And part of that is because we trade the trend. When you trade the trend and don't use a stop loss, all you got to do is hold the trade. And you're going to see at times we don't even time the trades properly and they'll drop like 50 to 90%, and 7 out of 10 times they come back to life, which is why we always look to hold and never sell for a loss, and we don't use stop losses, right? It comes back to life 7 out of 10 times. Why are we going to try to be right 3 out of the 3 times that we'd be wrong? Why would we try to do that? 1 out of those 7 trades is likely going to be multiple 100% profit returns. It makes up for the losses regardless of the win rate, right? But obviously on a dead play, if we're right 7 out of 10 times, it obviously makes sense to hold. That's a 70% win rate. And there's just no point in trying to be right in that situation because, like I said as well, one of those that we're trying to be right on could be the biggest percentage gain, right? And you're going to see when we enter dead plays, at times we buy a second strike, and that second strike tends to be timed at the exact lows if the first one wasn't, for a phenomenal entry and trade. So if you're serious about trading a long side with us, it's going to be the first link down below in the description. If there is no link down below within the description, you can just go on wap.com and just type in Team Roar, R-A-W-R. You can go on wap.com, go in the search bar, and just type in Team Roar if there is no link down below in the description. That is Teamrawr, and you'll see it on wap.com. It's on WAP. You'll see it there if there's no link down below in the description and you would like to join us. With that being said, it's the first link down below in the description. You guys know that Fridays tend to be our absolute best trading days. We are going to absolutely crush it heading into tomorrow. We're going to finish this week very, very strong within the green. We've literally been crushing it every single fucking day, man. The gains, the fucking results have been fucking amazing. So if you're serious about making money, trading alongside multimillionaires, gaining access to our secured private organization, it's going to be the first link down below within the description. With that being said, we will see you guys tomorrow within the chat.